Hello traders, Today we want to discuss how to simplify the Elliott wave principle analysis like a pro. How to simplify the Elliott wave principle analysis like a pro. All right. So the number one objective of the 2-4 Elliott Waves YouTube channel is to simplify the Elliott wave principle analysis without diluting it. All right, so we are simplifying, we are showing traders the simple ways one can count wave, the simplest ways one can forecast the financial market using the Elliott wave principle, the simple way to profit in the financial market using the Elliott wave principle without diluting, the Elliott wave theory. So today, all right, the time has come to talk about how to simplify the Elliott wave principle analysis like a pro. All right. So if you are looking at this chart, this is a Ross Stores Incorporation. All right. So if my pronunciation is not correct, all right, feel free to correct me. All right, Ross Stores Incorporation. This is an American stock listed on the Nasdaq 100. All right. So suppose you on a monthly chart like this, you are looking at this chart, you see all these move ups and down, ups and down. You may say, George, I don't think that I will get it right. All right. Where is the first wave? Where is the second wave? Where is the third wave? Where is the fifth wave? All right. What's going on here, George? This Elliott wave principle is too complicated for me. I don't know what to do. All right. I have a good news for you. All right. One thing you need to understand, all right, when we are talking about Elliott wave principle analysis, it becomes a bit complex when we are on the lower time frame. So if you try to count wave on the 1 minute time frame, it's more challenging than the 5 minute time frame. So the lower time frame you are on, it may be a little bit complex. Sometimes the inverse is true, but very often, all right, on the lower time frames, the wave count can be complicated, can be complex, and very often traders make mistake if they are counting wave, for instance, on the 1 minute time frame, 5 minute time frame, or 15 minute time frame, or even an hourly time frame, because they don't see the bigger picture. In order to cut all the complication, all the complexities, all right, in order to simplify the Elliott wave principle analysis, you may start from a higher time frame. It becomes so clear and easy and simple to start the Elliott wave principle analysis on a yearly chart. So you see here like this, can you see all the way? It's not very clear, all right? It's not very clear. But you can count the wave, all right? So you can start counting. I use the monthly chart very often to count wave. And then I go to the higher time frame, yearly chart, then I go to the lower time frame, which we explained last time about how to combine the Elliott wave analysis and multiple time frames. Check it out, at 2-4 Elliott Waves YouTube channel. All right, let's drop down a little bit more to the weekly chart. It become a little bit challenging. All right, you see here. All right. So we are going on the lower. Let's go to the daily chart so you may see it. Oops, look at that. Where are the waves? All right. But now, in order to simplify your wave count or your Elliott wave analysis, you may start from the higher time frame. Look, this way on the yearly chart. Can you see all the waves now? So, first wave, second wave. We are now in the third wave. Is it simpler now? Have I taught you something that you can do? All right. So start from the highest time frame that you have on your chart. So because some trading software, do not allow traders to see the yearly chart, which myself I will never use. But if that's all you got, all right, use it, But if you can see the yearly chart, that's very, very important. But personally, I will never use any charting software that is not showing me the yearly chart. I need to see the yearly chart. So now you're on the yearly chart, it becomes so easy to count wave. Try it and let me know how you find it. Start from the yearly chart, draw the line like a little chart. Just say, it went down from here to here, and then it pulled back from here to here, and then it went up. Now we are here. So you say 1, 2, 3. Don't violate the wave count guideline. There is consolidation. You see here, consolidation, breakout, second wave, third wave. Follow and then check whether there is an Elliott wave principle violation. So remember what I'm saying to you. We want to simplify the Elliott wave principle analysis without diluting it. So as you are counting your waves on the higher time frame, do not violate the Elliott wave principle. All right, very, very important. Second wave should not completely retrace the first wave. All right, and the fourth wave should not overlap. Okay, the high of the first wave. All right, and understand the structure of a motive wave. All right, subdivided into 5, no overlapping, wave structure still in place, and do it from the higher time frame. So you are counting your wave from the higher time frame, and then you're going down to see the internal wave. So now that I see it like this, I say, all right, we are now in the third Elliott wave. So one more thing that you can do to simplify your Elliott wave principle analysis. Now that you see like this, so you may draw a line. So you see here, boom. Remember, if you change time frame, the line, you may have to adjust the line. So I'm putting it here on the chart, but when we go to the monthly chart, you see that I will have to move this vertical line. So the next thing that you do is to just separate all the waves. Okay. That's it. All right. Okay. So I will say, okay, third Elliott wave in this session, second wave in this session, and then now the first wave in this session. And from there, I'm going now to the lower time frame. I want to see what? The internal waves. So if you go, for instance, on a monthly chart, you may see this session, all right, clearly, and then we can start going through the internal waves that are forming during this session. We may have to adjust our vertical lines because what we are doing now, by going from the higher time frame to a monthly chart, which is a lower time frame comparison to the yearly chart, going from a higher time frame to a lower time frame, it means that we are zooming into the price. Zoom into it. If we are going from a lower time frame to a higher time frame, we are zooming out of the chart. But it's the same financial instrument that we are watching from different angles, from different viewpoints. Okay, let's go to the monthly chart. So now we go to the monthly chart. Here we have all our vertical lines. So we know that this is the third Elliott wave here in this session here. But now that we change our time frame, we need to see the internal wave and see what is going on. What is going on now, George? All right. And from there, we can improve our income. One more thing I need to say to traders. So if you are using TC2000 like I do, all right, by the way, if I'm talking about TC2000, I don't get any commission. I don't have any relationship with TC2000, all right? And I just use it, and I like it, okay? So if you are using a charting software that allows you to see the yearly charts, okay? And you have done what I've done so far from the yearly chart, you just highlight the waves, and now you are switching to the monthly chart. You see all these sessions here, you see how the price is showing here, it's not very clear. Look, even the first one is not very clear. You need to zoom into them because now, sometimes if you zoom into them, you may notice that, that's not, it does not have the structure of an impulsive wave. So what I'm calling the first wave now, I will have to zoom into it because it's not very clear. Just, you see, and now second wave, what's going on? We want to zoom into them, all right, to see the price structure. So the first time we are starting from the higher time frame, and then we drop down. As we drop down to the lower time frame, we want to zoom into each session if we can see them. Sometimes you may not see them. In that case, you can only work with what you got. All right? All right? So let's zoom into this first wave here. I'm going to zoom into it. All right? It's not very clear. It's not very clear. Now it's becoming clearer. Now we zoom into it. See here? Is it making sense to call this the first wave? All right. Now, I've done a bit of homework before, so because I don't want the video to be too long, so it looks like a first wave impulsive move. It just went up, boom, 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 up. So our first wave is a complex first wave. All right, it's a complex first wave. Hold on, please. I need to write something down for myself. so I do not forget. This is the second wave. In fact, as I told you before, this is the second wave in a triangle. This is what we call horizontal triangle, A, B, C, D, E. Area wave triangle. Are you with me? All right. 1, 2, 3, 4, 5. Okay. A, B, C, D, E. This one is telling us some story. This one here, we will talk about it another time. As I mentioned it to you last time, that pop out of the triangle. All right. And now we have, okay, so this is our first wave from here. So what we are doing, we are zooming to it. This allows us to simplify. So we start from the yearly chart. We see the bigger picture. We just highlight them. Now we drop down to the lower time frame. Now we are zooming into each session to see whether is it making sense or not. Or are we violating the area wave principle? Because our objective is to simplify the area wave principle analysis, but we don't want to dilute it. All right. So the exercise that I'm doing now is to avoid deleting or the area wave, calling something else. Okay. Boom, up. All right. And here it is, my friend. Boom, up. All right. So our first area wave, which is from here up to believe this point somewhere here, okay, is subdivided into 5 Manor wave. First Manor wave, second Manor wave in horizontal triangle. All right. Area wave, a triangle. All right. Now we have, okay, the third Manor wave, 1, 2, 3, 4, 5, followed by the fourth wave of our fourth Manor wave of our first wave. And now we have, okay, the fifth area wave, the fifth Manor wave of our first wave. Are we violating the area wave principle? Are we diluting the area wave principle? I do not think so. I do not think so, all right? So from here up to this point, all right, that's the first wave. From here to here, first wave has been subdivided into 5 waves without any area wave violation. So this is the real fourth wave. This is the fourth Manor wave of the first wave, because the first wave has been extended. It's a complex first wave. This is the fourth Manor wave. This is the fifth Manor wave. The third Manor wave is from here to here. From here, okay, to here. That's the third Manor wave of the first wave, followed by the fourth Manor wave of the first wave and the fifth Manor wave of the first wave. This is the second Manor wave of the first wave, which is a triangle, and this is the first Manor wave of the first wave. With this first wave, we can forecast the whole multi-wave somewhere, okay. At the beginning of 2004, we can forecast what is likely to happen in the future using the internal wave of this first wave. Now, you can see also that everything is working good because we see a consolidation. Is it a consolidation? Yes. All right. Now, it's becoming a little bit clearer as we zoom into it. You see now? All right. So we did not violate our wave count guideline. Consolidation, breakout. Boom, 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 up here. So I have to adjust my line here. So my first wave is ending right here. This is what I'm talking about. When you change time frame, you may have to adjust your vertical lines because we put them on the chart, on the yearly chart. Now this is our first wave. Is it difficult? It's not difficult, all right? So from the yearly chart, it's very simple. We see it now that, okay, we have, okay, the first wave ending here, okay? And now we see, all right, that It's the first wave. So we can see now that our second wave, remember, can you see that? This is very interesting a chart here. If I dwell on it, we will spend the whole day on it, all right? And you see, look at that. Look at the second wave of the first wave. It's a triangle. Look at the real second wave. It's also a triangle. You see the power of the Elliott wave with the wave structure of the first wave. At this point in time, by looking at the internal waves of the first wave, remember, we can expect the real second wave to be also a triangle. And that's exactly what we call, my friend. Can you see the triangle here? Blah, 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 blah. Can you see the triangle, my friend? Can you see the triangle? All right. So I believe that triangle is a bit messy. All right. It's an expanding triangle, in my view. It's an expanding triangle. Careful. It's an expanding triangle. If you agree, feel free to bang the table. All right. Try they do. All right. Try they do bang the table. All right. Look at this one. Do you get it now? You see? This low, this low, this low. It's an expanding triangle. Can you see? It's an expanding triangle. The expanding triangle is telling us a lot that the following move can be a fast move. It can also last whenever you see. The second way is an expanding triangle. Be ready to catch that third Elliott wave before it is too late. But something has happened here, so in my view, this is the expanding triangle ending right here. Feel free to disagree. So, by looking at the internal wave of the first wave, we can forecast what is likely to happen during the real, okay? We can expect a specific price structure. This is an expectation. The price does not have to be, okay, exactly, well, the price does not have to fulfill our expectation, all right? It does not have to print it exactly like we are expecting it. But we are expecting something, and if it's happening, we'll have an edge. But as we are expecting a triangle during the second Elliott wave, here it is. But here, this was not an expanding triangle. You see the difference? So there was a bit of alternance. This was, okay, contracting triangle. This is an expanding triangle. A bit of alternance between the first wave, okay, a triangle, and this real second wave. So in my view, my friend, there's something here that you need to check, which is happening when we are counting Elliott wave. Remember this? Because, which I explained to you last time, because there's a group of traders, we want to go to other traders' mindset. Personally, this is the first minor wave of the real third wave, and this is the second minor wave of the real third wave. But you can see that it's almost at the beginning of the first minor wave. Personally, I usually discount this kind of second wave. Because it shouldn't come all the way at the beginning. If at this point in time, all you can do, you will say, as you will hear me talking about before, let's give it a chance. This is what's happening when we are counting. We say, why is it coming at the beginning of it? I don't like this. Okay, all right, but we are here. So we say, all right, let's see what's going to happen. This is the kind of language you'll be speaking to yourself as you are observing the chart. You say, all right, don't like this. Shouldn't be there. Shouldn't come all the way at the beginning. But there is a group of Elliott wave practitioners that are saying that the second Elliott wave can come all the way to the beginning. That's not my recommendation to traders. So what I'm saying to traders here, whenever you see like this come all the way to the beginning, there's a little bit different, just tiny different. You can see that the low, you see, almost exact level. You see, tack, tack, come to it. There is a group of Elliott wave practitioners that say that, all right, it can come all the way to the beginning. I disagree. So whenever I see like this, I say it shouldn't come all the way to the beginning. But what they are doing, they are buying as the price approaching, like they are buying, and they are hiding their stop loss below the low of the first wave. But I don't like this. So whenever I see like this, I say, all right, I don't like this, but let's see what's going to happen. This is the case here. So you see, that's why he came back here but did not close, has a tail pushed back up here. All right, so you will see that sometime, and you want to take it with okay. All right, gently. All right, take it gently. So first minor wave of the third wave, second minor wave of the third wave. I'll put it here instead of here. That will make me feel good. And then let's see what's happening here. And now we see it's coming up now. The third minor wave. Okay, are we there? Yes, that's correct. The third minor we see quite prolonged. We can subdivide this also into 5 waves, but I'm not going to spend my time on that now. So first minor wave of the third wave, second minor wave of the third wave, and then third minor wave of the third wave. It's a complex wave count, my friend, and the fourth minor wave of the third wave. And here it is. This is the end of the third wave right here. Right here. So from here, I'm going to place another vertical line here. Am I correct? That's correct, okay. That's the end of our third area wave. Now, our third area wave, I'm going to, leave it as it is. And now we have, the fourth wave, which I usually color into pink to please the beautiful area wave practitioner. All right, you know the joke. You know it. All right, it's a joke here. And now followed by the fifth area wave that is ending here, which I usually color into red to signal to myself that, George, be gentle. All right. So you see now. Can you see? So from the monthly chart, when I was showing you the chart first time on the monthly chart, you can see that it's quite challenging, to count away. When we drop it down to the weekly chart, it becomes more confusing. On the daily chart, it just blah, blah, blah. And now, you see, in order to simplify our area wave principle, wouldn't it be good to start from a higher time frame when we have few waves? Then we can quickly highlight, and then we start from the top to the bottom. That's what we are doing here. But whenever we go from a higher time frame to a lower time frame, if the price action, as I show you on the monthly chart, is not very clear, as I show you for the first wave, we need to zoom into it, all right? Zoom into it if you can. If your charting software allow you, zoom into it to see the price structure so you do not violate the area wave principle. Because our objective is to simplify the area wave principle analysis without diluting it. So my wave count here again for the third wave, first minor wave, second minor wave, third minor wave, fourth minor wave, fifth minor wave, it did not violate the area wave principle at all. And we can see that that third area wave has been extended a bit. All right? How do we know that the third area wave is extended? Hey, you should know now, my friend. Are you subscriber or not? Or are you new? Okay. You have to use. So what we will do, we have to use Fibonacci extension. A lot of traders already know this. Are you new to our channel? All right. Okay. So we will use, careful. The Fibonacci extension that we apply to the what? The first wave. All right, so we apply Fibonacci extension to the first wave. And which level are we watching? 161.8% Fibonacci extension level. Allow me to write something down, my friend. Okay, all right. We're watching the level of 161.8%. Fibonacci extension level of the first wave. Yes or no? So that's the line. So we'll quickly draw a line there. That's the line I put there on my chart. So our expectation that a normal third area wave will end in that zone. Yes or no? You see now? So from the yearly chart, it's so simple, all right, to count away. 1, 2, 3. All right. We know now that we are in the third wave. We know we are in the second wave. And now we are breaking it down, all right, by bit, all right? Okay, so look at this. I was telling you that my third area wave is ending here. I'll show you right here. Color it into red. And that third Elliott wave is also a complex wave. Look at that. Beautiful. Complex wave. And look at the 161.8% Fibonacci extension level of our first wave. Is everything adding up? Right here, that's the orange at 161.8%. That's the orange line here. And you can see it breaks above it. Look at the reaction. Look, this is what we are talking about. Look at the reaction. It breaks above it and retests it. Look at that. Beautiful. So these are the places you can enter the third Elliott wave and retest it here. What is the next level you should watch? The 214%, the 314%, and the 414% Fibonacci extension level, where the third Elliott wave is likely to end. My friend, look at 414% Fibonacci extension level. All right? Green line, green line. You see, look at the green line. Pew. So our third Elliott wave went a little bit above, okay, that 414% Fibonacci extension level. And look at the fourth wave. The fourth wave just pulled back gently to retest the 414% level. Are you getting it now? Are you getting it now, my friend? Okay. So one more thing, because we want you to, the objective of this channel is to teach traders how to start, okay, and complete, okay, a valid Elliott wave analysis and be able to forecast the financial market like the analysts themselves. All right. So by looking at the structure of the first wave, all right, the first wave is telling a lot of story. It's saying to us that there's a high chance, George, that the second wave is likely to be a triangle. Now you can see that we have exactly the second wave is a triangle. Have you forgotten? It's an expanding triangle. Isn't it good to know the Elliott wave, to know what is likely to take place? Now, what I'm going to do more, I'm going to zoom into the first wave. So from here, from here to here, that's the first wave. Look again. The first wave is telling us again, looking at the structure of the third minor wave of the first wave, is telling us that there is, George, expect that the third Elliott wave, the real third Elliott wave, will be expanded and will be a complex third Elliott wave. There are more we can do. We can look at how far the second minor wave pulled back, how far the fourth minor wave pulled back, how long the third minor wave pulled back, and we can check all this information. And we have an edge, but we are not arrogant Elliott wave traders. We are not old-fashioned Elliott wave traders that make too much noise. We just smile and wait. We are expecting something. If it's taking place, we follow it. Okay, we just follow it. All right. All right. You remember what we said before? If the signal fails, just come out. All right, just come out. So the internal wave for the first wave is telling us that we will expect a third wave that is expanded, and this is also a complex wave. 1, 2, 3, 4, 5. Let's see our real third Elliott wave. Look at this. Okay, our real third Elliott wave. 1, 2, 3, 4, 5. It's a complex wave, and it's also extended. Just looking at the internal wave or the first wave, we have a lot of information. Sometimes, my friend, it's becoming a bit exciting, so I need to cool you down a bit. The reason is that sometimes you may see the structure of the first wave like this, but the price will print something completely different. I need to say that, all right, so you do not forget. So all you need to do, all right, don't be a gambler, all right, don't jump on it, all right. Just say, maybe there is a high probability that it may happen. But there is also a small probability that it may not happen. Okay, with that in mind, you just wait. And if it's printing it, you take it gently. In all cases, my recommendation is that you use a multiple time frame trading method. The signal fell, come out. And come back another day. Isn't it beautiful? Here it is, all right? So the fifth wave, in fact, the fifth wave is also a complex wave, all right? But I don't want to dwell on it. You can see a straight line, but it's formed of a 5 minor wave. This fifth wave of the first wave is also extended a bit. Okay, here it is, all right? Here it is. And if we go deeper on the daily chart, you will see that this one also is subdivided. You see there's a pullback here. You see these tiny candles here. Am I talking to myself? You see? This move up. We can subdivide it into 5. Can you see? We can do the first candle like this. The second one like this. Is it making sense? We can go like this. And we can say this is the 4th minor wave or the 5th wave. And we can say this last candlestick bar is this one here. So there's another vertical line I need to put here. That's the end of our 5th wave. Now another vertical line to separate the 5th wave from the 4th wave right there. So 4th wave, 5th wave. Now what is happening, my friend? Where are we now? So we start everything from the yearly chart. We see all the wave clearly. Now all we are doing, we are putting everything together to make sure, okay, we are not violating the Elliott wave principle. But by starting from the yearly chart, our Elliott wave analysis was very simple. We were able to identify the first, the second, and the third wave. So all this move, all right, all this move up is just the third Elliott wave. But if you see on the yearly chart, you know that the multi-wave, so when we are talking multi-wave, we are talking about first wave, second wave, third wave, and the 5th wave. So the 5th wave is ending here. But on the yearly chart, if you were only on the yearly chart, you would have violated the Elliott wave principle. You'll think that the 5th wave is ending here. All right, but it's not ending here. It's ending right here. All right, the 5th wave is ending here. So the first wave, second wave, the third wave, the 4th wave. Now the 5th wave is ending here, not here. So what is happening now? It's a flat correction developing. Okay, so what do we have? We have 1, 2, 3. Can you see 1, 2, 3? Price went down. All right. If you are not sure, ask your children. They will tell you. Price went up. They will tell you. Children don't lie. The price went down. Yes or no? So 1, 2, 3. Okay. And now we go again. 1. You went up. Yes or no? Children will not lie. You went down. Now it's going up. Okay. And we are also, so where is this is an expanded flat correction. So how do I know that it's an expanded flat correction? Because we went above the high of the 5th wave. The expanded flat correction usually takes place, okay, at the end of the 5th wave. Usually. But sometimes you may see even during the 4th wave. But here it is, you see, 1, 2, 3, which I like to do. I like to color into orange. Allow me, my friend, to satisfy my intention to color. Now, this is to make you laugh a bit because you have been watching this video for some time. You need to cheer up a bit so you don't get tired, all right? So you need a little bit of break, but because you're still watching, we need to say something, okay, to cheer you up. So you may find it a bit interesting and keep watching it, okay? That's it. So 1, 2, 3, 1, 2, 3. Okay, this is A, B, C. All the ABC correction, the C is always subdivided into what? Into 5. The C part of all ABC correction will be subdivided into 5. Very important. So we will be expecting this stock to go down 1, 2, 3, 4, 5. Okay, that's all. That's what I would say here. 1, 2, 3, 4, 5. So how do I know that this? Look at this. So when the expanded flat correction is being formed at the end of the 5th wave, I need to see the top of my 5th wave exactly because I want to apply Fibonacci extension now to the 5th wave. All right. And here we are. We're going to apply Fibonacci extension to the 5th wave. Usually the flat correction will end at which level? Tell me, well, at 138.2% Fibonacci extension level of the fifth wave. There are more to this. I will be talking about it more and more. But just remember that the expanded flat correction, if it goes above the high of the fifth wave, people will think that, oh, we thought that the trend has ended here. But look, it's going up more. And to the surprise of everybody, the price coming back down 1, 2, 3, 4, 5, completing the flat correction. So when the expanded flat correction being formed at the end of the fifth wave, the B part of the flat correction usually ending at 138.2% Fibonacci extension level. Okay, see 138. I use exactly 138, so I cut it exactly. It worked beautifully. 138% Fibonacci extension level of the fifth wave. That's it. 63, 63. That's another beautiful number. 63, 63. Oh, beautiful. So it's easy to remember this number if you trade a Ross Store Incorporation. So you can remember it's the priority bullish signal be above 63, 63, break above, retest, turn around, a priority bearish signal below 63, 63, 63, 63. Oh, beautiful number. All right, you can see that I'm getting a bit excited because this is our objective at 24 Elliott Wave YouTube channel to teach traders how they can also reach a level where they can start, okay, simplifying the Elliott Wave principle analysis without diluting it. It's a very simple example that I've given you now. And you can see that we start from the yearly chart when everything was quite simple, clear to us, so we can know where we are. We see the first wave, we see the second wave, we see the third wave. We highlight them with a vertical line. Then we drop down to the monthly chart, and then we start zooming in each session. By zooming into each session, we are pinpointing the internal wave of each multi-wave, and we are adjusting our vertical line, seeing that everything is working beautifully. This was an excellent example because we were looking at also the internal waves of the first wave that have allowed us to focus the multi-wave. There was the second minor wave or the first wave was a triangle indicating to us that though the second wave has a high chance to be also a triangle. And here it was an expanding triangle. By the way, there was a trader that made a correction. I would like to say to that trader, thank you, correction for something about a descending triangle. Okay, so let's stay on the subject. So the second minor wave of the first wave is a triangle indicating to other there's a high chance, not guaranteed, all right? Not guaranteed, not always. There's a high chance that this real second wave may be also a triangle. But in this case, we see a bit of alternance between the first triangle and the second one. The first one was a contracting triangle, and the second one was an expanding triangle. All right. We also see from the first wave that the real third Elliott wave is likely to be extended, all right, and will be also a complex third Elliott wave. With those information, we continue to, okay, count wave, and we see that everything was beautiful and adding up correctly, and we have validated our wave count from the yearly chart down to the monthly chart. It's now clear to us that a flat correction is now in place, and the last part of the flat correction, the C part of the flat correction, in this case we are talking about an expanded flat correction because it went above the high of the fifth wave. Will it come down 1, 2, 3, 4, 5? All right, or will it continue to go up above the level of 63, 63? How can one forecast the end of the C part of the flat correction? One will watch the Fibonacci extension 138% and then 161.8% Fibonacci extension level of the A part of this ABC correction, of the A part of the flat correction. What is it? This is from here down to here. That's the A part of the flat correction. one will apply Fibonacci extension to that, and we want to apply the Fibonacci extension upside down, so the extension levels are below the low of the A part of the zigzag, the A part of the flat correction. This is the low of the A part of the flat correction. So we apply Fibonacci extension upside down because we want the extension to be below, right? Because it moved down, so should be below the low of the first wave. We want to watch the level of 138.2% and 161.8% Fibonacci extension level of the A part of the flat correction. This is the end of this tutorial, all right? And I hope you have learned, okay, from it, all right? That you will, okay, practice until you gain the skills, all right, to start, okay, simplifying, okay, the Elliott wave principle analysis like a pro. If you have any question or suggestion or comment, put in the comment section. And in due course, I will be busy recording another video to answer your specific question. We are the GSTWSYS008 traders talking about how to simplify the Elliott wave principles like a pro. Happy trading to you all and speak to you soon.